John, thank you for joining us today. You and your team are in London meeting with investors. I'm curious how these meetings are going, and maybe you can give us some color on the type of funds you're meeting with also.
Yeah, we've been book solid, which I think is a really good sign that investor interest remains very high. Right across the gamut of specialist funds that have been involved in uranium for several years to a number of new generalist funds that we're talking to. That I say this all the time. They're still very early in their research work. They view this as kind of a mega trend, a long-term secular play, and they continue to do work on uranium and the whole nuclear fuel supply chain. So had a lot of really interesting meetings over the last couple of days.
And in terms of jurisdiction, are they Americans, Europeans, Asians?
It's a real global trend because it is a global trend. With the exception of a few outlier countries, I think the world is really pivoted back to nuclear energy as a solution to meet a number of really important needs. Obviously, energy security and national security and climate change driven objectives are all, I think, taking front center stage in terms of why they're pivoting back to this technology. And obviously, a more emerging theme that's coming out is around grid stability. We saw grids in Spain in the last couple of months fail. People are looking for baseload power. AI data centers is a huge part of this story. These hyperscalers are consuming huge amounts of electricity. So the utilities here, I think they're feeling very good about demand for their electricity, and also electricity prices remain very high. So that's a good environment for these companies to make investments long term.
And when you're meeting with these funds, especially the generalists, what sort of questions are they asking you?
Yeah, they're really trying to understand all the parts of the supply chain, everything from uranium mining to uranium fuel processing to all the companies that are involved in the actual manufacturing and building of power stations. Obviously, there's a lot of new emerging technologies that people are trying to assess to see which ones are going to be the winners in that race to develop small modular reactors, micro reactors, etc.
I was speaking with somebody earlier, and they were sitting in on numerous meetings, and one of the things they pointed out to me was that everyone's talking about nuclear energy. Very few people are talking about uranium.
Yeah, I actually agree with that assessment. There's been a shift, I would say, from, say, 2 years ago when we were here, when it was all about the fuel, and now it's gone down market, which is actually good, because if you want to have more uranium demand and stronger prices, you need to build more capacity downstream. So the focus, I agree with, is actually shifted to all of the interest about building new capacity at the power station level, which will ultimately lead to more uranium demand.
So last year, I'm sure you would agree with me when I said it was characterized by a lot of frustration, because we saw a big pullback in the spot price. 2025, a little bit different. It kind of feels like it's stabilizing and maybe consolidating. Maybe you can give us some color on what's happening, or your assessment on what's happening within the spot market.
Yeah, I think it's fair to say that this was a very unusual year. A lot of that was really brought on by the incoming administration. Uncertainty was really the theme with respect to energy policy, the Inflation Reduction Act, tariffs, trade relations, the war in Ukraine. All of those things were big obstacles and created a lot of uncertainty for market participants and investors to make decisions. And I think a lot of that has kind of cleared. We obviously saw the market bottom in April. And since April, we've seen a really strong V-shaped recovery in the stock prices. The price of uranium has come up from a low of 63 to now in mid 70s. And it feels like the uranium price wants to grind higher based on investor sentiment. And I think growing realization that their supply challenges, even amongst some of the biggest and best miners, are real.
And so to that point, you did a raise earlier this year. You wanted to raise 100. You ended up raising $200 million. That money is spent now?
Yeah, I mean, that was a really well-timed, I think, transaction. We were really happy with the support we received from about 40 different institutional investors from around the world. That $200 million we wanted to opportunistically put to work in the market while the market was kind of, going sideways and being distracted with all of these tariff and trade issues that I mentioned earlier. We've spent that money. We've acquired another about 2.5 million pounds of uranium. Really happy with those purchases. And the trust has been trading much better in the last few days, and our at-the-market offering has also been reactivated after a little bit of a hiatus.
So that means the trust is trading at a premium, so you're able to raise cash. Why do you think it's trading at a premium?
Yeah, I mean, if you go back to April, and let's call that the market bottom, and the trust at that point was reflective of all of this uncertainty. And it was trading at about a 20% discount to NAV, which I think was the most extreme in its 4-year life. That has now closed back to a small premium. And I think that is a very strong barometer of investor interest returning to this space, people feeling like they can get positioned again, that we have more certainty going forward on some of these big, macro and geopolitical issues.
So there's been a new development at Sprott that I want to bring up, and that is the fact you can now trade options on that product. Tell us about this.
Yeah, we're pretty excited about this, and it was a long time in the making, and I wish it had come earlier. But as of this week, there is going to be options trading on the Canadian dollar line on the Toronto Stock Exchange. And why this is important is because it gives investors another tool to play the uranium space. It's important because many institutional investors over the years have gravitated more to options-based trading strategies on underlying ETFs and closed-end funds. And there isn't an active futures market for uranium. So this is really going to help to fill that void. I hope it creates a new use case for the trust where potentially producers, utilities, and traders could use these options to help gain exposure, manage exposure, etc.
And because we are in Europe, we have to talk about your European partner, Han ETF. They're based here in London, but they look after distribution, regulatory issues, et cetera. Maybe you can talk about that and how European investors, if they want to trade the Sprott product, they can do it through the Han ETF. Is that correct?
I mean, this is a global category. There's global interest in uranium. And so at Sprott, we have a number of different funds domiciled in various jurisdictions, including Canada, the United States, and we have these Irish domiciled funds that our partner Han ETF distributes for us. So we have versions of the uranium mining ETF and the junior uranium mining ETF that are domiciled as UCITS funds, which are requirements for many local investors to participate in. Those are available in different currencies as well. And we're very happy with the partnership with Han over the last 3 years.
So I have to ask you about gold now. Your largest physical trust is the Gold Trust. And gold, great 2024, was up 25%. We got 3 or 4 months left in the year, but gold's up 30+%. Maybe tell us about some of the flows you're seeing in the various Sprott products.
Yeah, I mean, it's been a huge win for our clients. Obviously last year and this year, the Gold Trust is well through $12 billion US. And, we've raised over $1 billion year to date in that fund. I remember you and I sat down at the beginning of the year and we were talking about the Gold Trust, and I said we were really disappointed last year, not in the performance, but how much capital we had raised, which was about $350 million. And I said investors were just not paying attention. Now the fund is up another 30% and the money is finally starting to come in. We want to take advantage of the price action and add more to our vaults. So we've been very active on that fund. And more recently, silver's kind of come back to life and is at a 10-year high. And it feels like it wants to break free and surpass the 2011 high, which was at $50 an ounce. So we're feeling pretty good about uranium, gold, silver, and platinum at Sprott. And we've been very active in all those metals.
So one of the things I really enjoy about Sprott is the wealth of information you have on your website. If maybe you can just talk about that, and investors have an interest in gold, silver, uranium, or very many other products.
Yeah, I mean, we want to be the expert for all kinds of investors, whether you're a do-it-yourself investor or a very sophisticated institution. We want to make ourselves available and our team of experts. We want to share our insights. I probably spend the vast majority of my time on investor education in one way or another. You're a big part of that in terms of helping us get our message across. So we really appreciate that. But it's really important because many investors, and it doesn't matter who you are, have not participated in a lot of these metal markets for the last 10 years. So it's a process of education and research. Where do I get information? I need to make an informed, educated decision. And so we really want to help people through that journey.
And so if somebody has an interest in checking out the Sprott website, where can they go?
Yeah, go to our Insights tab, and we also have an Education tab. There are some really great white papers that we write every month, reports on precious metals, uranium, critical materials. Our podcasts are hugely popular. We have a lot of in-house experts and outside guests that we bring in to help educate investors about these different categories. So that's a really good starting point.
And you and your team are always great at innovating and coming up with new products. Can we expect anything in the near future?
Well, we've been pretty active in the last few months, and we're pretty excited about a few products that we've launched. The silver miners and physical silver ETF has been a really well-received product that just crossed $200 million in a few months. Our actively managed gold and silver miners ETF is gaining traction, and we're just about to launch a actively managed metals and mining ETF in the United States, which will be coming out in the next week or so.
And when you say metals and mining, that's pretty broad.
It's going to be a more broad, dynamic approach to taking advantage of opportunities across a number of different metals and minings, in base metals, critical materials, steel stocks. It's going to be a more flexible strategy that our team is going to be managing.
Well, John, this was a great update. I want to thank you very much for spending time with us today. Good luck with your meetings.
Yeah, thanks very much.